Nat gas markets have pulled back during the trading session on Wednesday amid worries about bearish weather forecasts, erasing most of their gains from Tuesday, yet still remaining higher for the week overall. A rather bearish U.S. pattern over the next 15 days, as most of the U.S. experiences highs of 60s to 80s and only limited coverage of highs into the 90s over the southern U.S. There is a weak tropical wave off the Carolina coast that will drift northward into the northeast late in the week with heavy showers. Previously, analysts had connected the rise in gas prices to the surging oil prices, but oil ultimately closed the session with a decrease of less than 1%. Despite oil's recent recovery, which has seen it increase by around 14% in 2023, natural gas prices have experienced a starkly different trend, dropping by approximately 37% for the year and failing to align with the movements in the oil market. Equinor's head of marketing, Europe's largest natural gas supplier, warns that the gas market's persistent supply shortage makes it highly vulnerable to even minor disruptions. She pointed to recent strike threats in Australian LNG facilities, responsible for 10% of global LNG exports, which caused a 30% price spike in August. Rummelhoff emphasized that Europe's gas market no longer exists independently, as it relies heavily on LNG imports and global energy balances. She predicts ongoing supply tightness due to rising demand in Europe and Asia until new supply enters the market by the end of 2026 and 2027. Equinor expects European gas storage to be 100% full ahead of the Northern Hemisphere winter, offering some protection against supply shocks, but Rummelhoff notes that each winter acts as a reset for the gas market, with cold weather increasing prices and refilling storage becoming more challenging, while a mild winter has the opposite effect. Meanwhile, fresh talks between Chevron and unions over strikes at 2 LNG facilities in Western Australia ended on Wednesday without a deal, leaving it up to a workplace tribunal to map a way forward. The tribunal, which only has 1 day of hearings scheduled, will decide whether to intervene and halt the strikes which began on September 8 and escalated to 2 24-hour work stoppages over the weekend. A decision is likely to be swift, as early as the same day or the following week. Despite the bearish weather outlook for the next fortnight, the natural gas market seems to be adopting a bullish stance. This optimism stems from various factors, including the resumption of Freeport LNG flows, robust cash prices, and the resilience of energy markets, notably with oil trading at more than $90 per barrel. These indicators suggest that natural gas prices could maintain their strength moving forward. From the technical point of view, nat gas failed to settle above the resistance at $2.85 and remains range-bound. Given the current nat gas price at $2.74, it's trading above the 50-day moving average at $2.64, indicating a bullish sentiment in the near term. Thank you for watching. Please don't forget to hit the like button if you enjoyed the video. See you in the next one.